Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, June 22nd through Friday, June 26th, 2009. Well, as we get into this Weekend Technical Analysis Update, folks, what I really want to do is focus on the key technical levels, discuss a little bit about what we're looking forward to this week in the markets, and also look back to what happened last week. What were the key things that could be telling us what could be coming this week? Because I do feel there was quite a bit of it last week. Now, last week we had a down week on Wall Street, and I can go back and show you based off the charts here where we were last Monday, and let's do that here. All right, so if you go back to the 15th, Here's your Monday action, and we actually had a nice bearish pattern. As you can see, I denoted that on the charts last Friday. So a week ago from Friday, you had a nice bearish pattern as you kind of sloped up like this, and you can see there's an underlying trend line right there. We ran up a little bit into the close, but stayed below our key technical trend line master level of 95.25. That is very, very important to know that we stayed below that level, and you can see how on Monday it played out beautifully. You got a nice solid gap down on Monday. The markets really sold a good portion of the day and closed just off their lows. Tuesday we saw a little more downside. Wednesday we saw the markets mixed to flat. Thursday we saw the markets basically up slightly, and Friday the markets were basically mixed to flat again, with the spiders ending slightly lower by about 18 cents. So you can see the overall market was lower for the week. We dropped about, give or take, $3 on the SPY, and the overall indexes lost a couple percent for the week. Now, what does this all mean? Because we haven't had very many down weeks in the months preceding this one. All right, we saw March start in the rally, which we had nailed coming off of late February with a bottom call in the market. It's a beautiful one at that. We saw the market really rip higher for 3 consecutive months. March, April, May. Now in June, we've started to see this kind of summer doldrums almost hit, where you have lighter volume starting in. The market seemed to be being a little wobbly right now, but the charts actually show us that we have some good support at some key levels, and we're going to discuss those here. Now, Friday, again, the action was kind of interesting because what we saw, the market was trading up initially, sold off slightly, then rebounded to the high master level of 92.65 to 92.75, and what you saw here is the market kind of stalled out just as the 200 moving average came below and crossed over. And you can see how that kind of worked as a cap. All right, you looked like you wanted to break this 92.50, 92.75 level, this master level right here that I have in this pinkish color on the trend line, but the 200 moving average had other plans as it sloped lower, and you can see how that kind of works as a cap on the markets, and it caused a sell-off. Now, that's on a technical basis. If we want to discuss a little bit on the fundamental side, you can see that oil actually started to dump out unbelievably hard on Friday, probably one of the bigger reversals we have seen in the last few months. I mean, this was a monster reversal Friday, and the question going into next week is, does this reversal signify anything more than a one-day move? Because remember, options expiration was last week, all right? Last Friday, or on Friday, we had options expiration, and the key about that is you always are going to have weird moves in commodities and stocks and so forth going into that Friday options X close, because the big boys obviously want to close certain things at strike prices where the most people will kind of expire, or most of the options will expire worthless. That's how they're going to maximize their profit. That's their game, guys. Understand it so you know it. That's the bottom line. Understand the kind of the game that's played so you can avoid it as an options player if you play options. Okay, having said that, let's take a look at oil, the USO, and see the dump out. So oil starts to dump out right around 11:30, 12 o'clock on Friday, and it really just starts to dive. Comes all the way down, it starts making a little bearish in spirit of bear flag right here, and then starts to dump again. And you should know that pattern inside bars, inside of a big red candle. That's going to be a beautiful in spirit of bear flag, dumping all the way down. We close right here on the spot crude price at 2:30 p.m. Eastern Time here on the East Coast in New York, and you can see right there after that the USO kind of just trades sideways until the markets close. But in any case, the bigger thing is it's not necessarily that oil was down that big, it's the reversal that happened that's the key thing. And what we want to do is quickly look at the daily and see, okay, well, what does this mean? You have the 200 sloping down, you have the 20 here. What does this all tell us about this next week in the oil front? Are we going to see more downside, more upside? Obviously, we'll cover this in the premium subscriber service in the Research Center videos come Monday, and obviously over the next few days in the week, this week in the videos, in the nightly daily technical analysis video part of the research center. Now, again, the reversal could be key, so we need to watch that for next week. Do we see more downside? Do we see confirmation on Monday? What are we going to see? Now, going back to the spiders here on the SPY, you can see it was definitely a big catalyst to seeing the market selling here. Really starting around 11:30.12, which is right here. You saw the market break a key trend line. You also had a trend line that you could watch very closely. I had this in for my chat room subscribers right here. All right? So note right here how you're connecting this with the low areas right here and right through, and right as oil broke down, you could see it broke this trend line that told you more downside was coming on Friday. So down we went, bear flag, in spirit of bear flag, down we went again. We went right to the 9150-ish level, guys. 9150 has been a key level, scanning the charts back a ways, and again, if you just want to go back a little ways, we can actually go back a ways here, and you can see how it comes all the way back into play, all the way back here at the tops going back to late May. Very, very important level, so as you come down into it, notice how it was resistance right here, resistance, resistance, we broke above it. Well, now, guess what? Going back to current times, we're coming back into it. Broken resistance to the upside on the way down becomes support. That's exactly what we hit right here to just show you the level, why that's a level there, why that's important to know. And you can see that was a perfect little area. It also coincided with when oil closed, which is kind of interesting. Think about that. So oil gets out of the way. The market says, okay, we don't have to worry about oil falling anymore. The market starts to rally back. The actual leaders here take over that are financials. Financials really rip higher later in the day, and that's something we need to watch. Interestingly enough, JP Morgan, here, one of the leaders on Friday, happened to close exactly at $35. Now, those of you that want to understand the options market, you have to understand that I would almost promise you, or if you take a look at what the majority of calls and puts were, they all had the strike price, or the majority of them anyways, had the strike price at $35. JP Morgan closed exactly at $35. They expire worthless. The institutions that pretty much sell these, those are coming out as winners there, making the premium, obviously, on those. So it's an interesting thing. Understand the game, guys. Can't stress it enough. But JP Morgan really bursting higher. As soon as spot crude closes, takes off. Also, Goldman Sachs, right at that point, takes off to the upside, although it does come in later in the afternoon over the last half hour. It does see a little selling on the Goldman Sachs chart. So let's look ahead to next week. What are we looking at? Federal Reserve FOMC meeting Tuesday to Wednesday. We'll get the rate decision and comments at 2:15 p.m. Eastern Time on Wednesday. Now, there's probably not going to be any change in interest rates, but it's going to be the comments that are going to tell us, because we saw rates recently go to 4% and then pull back. We've seen the dollar weaken substantially over the last couple months. I would guess that the Federal Reserve will make some comments on that overall, and we need to watch them very closely. All right. Also understand that you're coming towards the end of the month, towards the end of the quarter. Could we see some propping due to window dressing by the institutions as they try to put the best face forward to their customers by adding some of these key, maybe high flyers late in the quarter here over the last couple weeks? I don't think it'll be a ton of it. I do think there will be some of it. Now, why not a ton? Because I think that a lot of these institutions and mutual funds and all these funds out there, they probably added they were probably freaked out on the rally, the strong rally, a week or two ago, or 3 weeks or 4 weeks ago, and probably did a lot of it then thinking they were going to miss the boat when the markets were up 40% off the lows. All right, oftentimes that can actually signal a top, so we should also watch for that in the market. But nonetheless, I would definitely be very cautious here going into the next couple, this next week, I would say, just because with the Federal Reserve meeting, that could be anything. We also have some key earnings from some retailers, also some housing numbers coming out, some housing numbers of earnings from, I believe, KBH and Lennar. That'll be very interesting to watch. We also want to watch jobless claims. Do they improve dramatically this week? What other data is coming out that's going to give us a little inkling about where we're headed? But anyways, on the technical side, guys, watch these levels. All right, master level 92.75, 92.70 right in here. If you get through that, your next master level would be 93.35, 93.40. On the way down, you're going to start to watch this low here at 91.50 and then 91.20-ish. After that, the even number of 91 to 90.90 will be a master level. You cannot see it on this chart right now, but if I scan back here, there it comes into play right here, master level just under 991. that you're going to be watching very closely, all right? If you're really interested in knowing more about the larger time frame going into, what's going to happen late next week, midweek, our projections on market guidance, are we short, are we long, looking at the Pro Trader watch list, looking at the daily market reports on gold, oil, and the projections on the 10-year, that's really where you got to step up and buy or pick up the Research Center, folks. And if you're interested in the chat room, always come and do that as well. Thank you as always. By the way, we are adding that new service to the Research Center. It's going to be amazing. It's called Hot Charts and Alerts. Will be key charts by technical chief market strategists. Take care.